Hey everybody, Mark Yegge, wealth architect, and in this particular video, we're going to be talking about what the heck is going on in the market. Like, do we have a bear market? Do we have a bull market that's crashing? What do we have here? We'll talk about that in this video. Hi, welcome back. I help 7- and 8-figure investors play offense and defenses with their finances. And a lot of people are asking me right now, is the market going to crash? Well, it's not like it's going to crash. Like, a lot of people think the crashes just happen overnight, right? And there are crashes that have happened overnight. 1987, we had a big stock market crash. 1929, we had a big stock market crash. But the problem is what happens before and after these big crashes, right? How do they recover? How do they come back? Do they come back? Do they keep going down? Well, there's two kinds of markets. There's bull markets and bear markets. Bull markets is like what we've had over the last 10 years, right? No matter what you do, you could put a list of stocks on the wall and you could throw a dart and buy one, and your chances are you're going to be able to make some money. Not that simple, but it kind of works like that. Things go up, right? And here's why that is, right? The denominator is going down. The dollar is losing value. And so as the dollar loses value, it makes everything go up. Now, there have been some good companies in there that are making money and increasing earnings and all the stuff that stocks do to continue to go higher. But that's generally a bull market is, things go down and people buy the dips and keep driving things higher, by and large, the good stocks, right? The other ones are all crap anyway, and they go down. Now, in a bear market, that's the opposite happens, right? So when we buy the dips in a bull market, in a bear market, we're basically on our way down. Now, it doesn't have to have a crash. Today, we're looking at a 700-point decline in the Dow Jones Industrial Average. So you could argue that that's a crash. It's really a 2% decline. It's not a crash. Crash is like 10% or 8% or some crazy thing. But it is part of a bear market that is shaping up. So I'm going to show you a chart here in just a second. And you're going to see every time the market makes a new kind of a peak, it's a selling opportunity for people, and they sell and they drive it down and down and down. And if you think about what's going on, we have an inflationary environment, right? So prices are going up. When prices are going up, people spend less. When people spend less, companies make less. When companies make less, they have to report lower or slower growth on their earnings going forward. Since stocks trade on their earnings going forward, if you have a deceleration in growth going forward, you now have a deceleration in the stock price going forward. So you see these wild swings, and people use these really great stocks, like the ones, you know what I'm talking about, the Amazons and the Netflixes and the Facebook, these stocks that were just killing it over the last 10 years. They use those as sources of cash, and they take those sources of cash and they buy safer investments. Okay. Now, what is safer? That's not for what we're going to be talking about. What I am talking about here, though, is that bear markets can last a long time. Now, we're not used to that. We haven't seen a bear market in a long time, right? The last one we had, which was a kind of a bear market, was in 2007 and 8. And we had lots of declines. We had lots of basically crashes within that. And then we had declines for almost a couple of years before we finally had a capitulation at the bottom. So right now, I don't know when there's going to be a capitulation. It's coming. There's always a capitulation coming. But the macro environment is such that people just don't feel like things are going to grow. I mean, we even have the Fed coming out this week, and they're going to post some minutes about how they're going to raise rates or not raise rates. I don't know what they're going to do. I don't think they're going to really be able to sustain a raise. And they're behind the curve, and they're kind of screwed. And basically, we're all screwed because we have a huge amount of inflation that's coming, and that's going to be reflected in a lot of assets. Now, it's probably good for the short term if you own real estate, because those assets will go up. Actually, the dollar is going down. Don't forget that, but they'll go up. So what do you do? Well, it's pretty hard to find a safe haven anywhere in a bear market, because people are just going to cash. Problem is, cash is inflationary. And so if you're in cash, you're losing buying power. I think it's about 20% a year. The government will tell you it's 7.5%. I don't know what basket of goods they're using, but I can tell you my gas isn't up 7.5%. My eggs are not up 7.5%. Everything I own has gone up, a lot more. Everything I buy, any service or product, is not, 7.5% up. It's up more like 40, 50, 60, double. Lumber's up 160%. If you're building anything, it's costing a lot more. So these macro things are now, they used to be tailwinds, but now in this environment, they're headwinds. That creates uncertainty and doubt. Whenever you have fear, uncertainty, and doubt, what we call FUD, you have selling. And that's what a bear market is made up of. So don't be lulled into that buy the dip thing. Oh, I'm going to buy things when they're on sale, because as soon as you buy them, right, because they're dipping, they can go down a lot more and a lot faster. So the big money right now is using the peaks in the market, the little peaks that are coming up, on these bounces, to use them as selling opportunities to raise cash. So be careful with that. What do you do? Well, there are assets that are not deflationary. There are assets that are not subject to inflation. There are assets that are basically safer havens. Give me an example. Now, if you're on this channel at all, you know that I'm a Bitcoin fan and a crypto fan, but primarily Bitcoin. Bitcoin has scarcity. You can't make any more Bitcoin. You can make as many dollars as you want. We've proven that. We've made 35% of all dollars ever printed in just in the last couple of years, right? There's no cap on dollars. There's a cap on Bitcoin. You can only make 21 million of those. You can look at gold and silver and commodities, because that's what people need during these times, right? They want to go towards safer investments. You can even look at things like wheat, food. Everybody still has to eat, right? So those things hold their value. So those are some of the places that you can start to look. I really, we could get into another discussion about Bitcoin and all that, and I'm not going to here, but based on some of the things that are going on in some countries, and right now we have the Russian-Ukrainian situation going on, and Bitcoin is saving some of those people that had the foresight or are able to use the Bitcoin networks that are out there. The same thing happened in Canada when they froze people's bank accounts. People are starting to realize that, the bank accounts that are sponsored by the government, and, here in the United States and in most countries, they're sponsored by a centralized central bank. If they have the ability to limit what you can take in and take out. And I saw this happen in Greece in 2013 when they limited the amount of money you could take out to 400 euros. You couldn't take out more than 400 euros, right? You could have 1 million euros sitting in the bank, but you could only get 400 out. And the whole country could only get 400 out. So there was a huge amount of capital controls that basically held everybody back and held the economy back. And it really hurt Greece. Can it happen here? Can it happen everywhere else in the Western world? We're starting to see it. We're seeing it in Russia. We've seen it in Ukraine. It's happening in Poland and Belarus. Happened in Canada. Could it happen here? Yeah, like it could. So you got to have a back door. How do you have a back door? Well, for me, the back door is Bitcoin, because nobody can touch Bitcoin. As long as the internet works, and I think it's gonna, nobody can touch Bitcoin. Now, if somebody takes down the whole power grid and takes down the whole internet and all 15,000 nodes around the world, which I think is pretty close to impossible. It's like saying we're going to remove all the plumbing from the world. Like, I'm pretty sure you can't do that. To me, that's the story of what you have to do in these bear markets. Are we in a bear market? I think we are. Can you do something about it? Can you make money in a bear market? I'm looking at my screen right now. I'm up 18% in the 6 weeks since we started the new year. And the market's gone down, I think, about 12, 13%. And I'm up. My hedge funds are up. So you can make money if you know what you're doing in this market, even in the stock market, by the way. So listen, please, if you like what I'm having to say, like and subscribe. It helps the algorithm get more people involved in this. I love making these videos, but I can't do it forever. Nobody's going to watch them, or if just a few people are going to benefit from them. I think we can all benefit from having some more information that is not biased. Well, maybe you get a little bias from me, but that is not filtered or censored by any other centralized authority. And so subscribe. It's a small price to pay, which is $0, for getting this kind of information. And I'll keep continuing to post these kind of videos for you. So thanks for being here. By the way, if you're interested in a cryptocurrency hedge fund that I run, we're looking at a long-term play on it. It's for accredited investors only, and I have more information if you want to click at the bottom to get information on that cryptocurrency hedge fund. I have other hedge funds in the stock market, but not here to talk about that. Just want to warn you that we are in a bear market, and I hope you take it seriously and invest accordingly. See you next time.